So the euro is trading back into the mid-range, and key levels to watch above and below come in at 110.60 above and 107.96 below. Until we see a break on either end, more consolidation is to be expected. If we do see a break back below 107.96, this will open the door for an acceleration of declines and a resumption of the downtrend back towards the 105.20 December low, which guards against the more critical support in the form of the multi-year low from March around 104.60. But a break back above 110.60 would open the door for a continuation of this correction out from the December lows and expose the 113 area further up. Sterling dollar. So cable remains under pressure, with the market now closing in on a retest of the 2015 low at 145.66. At this point, any rallies should be well capped, with only a break back above the previous lower top at 152.40 to compromise the downtrend. Dollar yen. So dollar yen remains pressured to the downside, with the market being very well capped by critical range resistance at 123.76. Deeper setbacks are now favored on a break below 120.35, with this to accelerate declines into the 119 area, which guards against that August base at 116.12. Euro Swiss. So not much going on with Euro Swiss as this market continues to consolidate over the past several months, though the broader recovery structure is intact, with the market eventually seen above 110.50 and towards the 115 area further up. At this point, only back below 107.15 would compromise this outlook. Aussie dollar. So Aussie has been bid up in recent trade, but overall the market has been locked in a consolidation over the past several months, though the consolidation is classified as a bearish consolidation in favor of resumption of the broader downtrend. At this point, only back above 73.85 would compromise this outlook, and any rallies ahead of that level should be very well capped. Dollar CAD. So dollar CAD has been locked in an intense uptrend, with the market trading up to fresh 11-year highs just above 140 and just shy of that 2004 peak at 140.07. But with technical studies now severely extended across daily, weekly, and monthly timeframes, there is risk for a bit of a correction in the sessions ahead to allow for these studies to unwind before the market looks to reassert the uptrend. Kiwi dollar. So Kiwi has been bid up over the past several days, though the market is now approaching critical medium-term resistance in the 69 area. Only back above 69 would ultimately compromise the broader downtrend here and force a shift in the structure. But inability to close above 69 will keep the pressure on the downside, with the market likely to roll over back down towards the critical multi-year lows in the 62 area from August. SPX 500. Although we've seen a bit of a bounce in recent trade in the S&P 500, the recent break and close below 2003, some previous support, is a critical development and suggests that this market is in the process of carving a more meaningful top in favor of fresh declines below recent lows just under 2000 and towards the 1870 area further down. At this point, look for rallies to be well capped ahead of 2100, while only back above 2117 would compromise this bearish outlook. Gold. So gold continues to consolidate just off recent multi-year lows at 1046, though the market is showing signs of wanting to potentially base out. But a break above 1100 will be required to confirm such a base and open the door for an acceleration of gains. Until then, the pressure does remain on the downside, and there is the risk for a break below 1046, which would expose critical psychological barriers at 1000 further down.